Hello traders, welcome back to another weekly prep video where we go through the markets and look for potential setups for the coming week. Today we are going to talk about oil, indices, bonds, the dollar, Bitcoin, and gold, and what the current macro situation could mean for these markets. So without wasting time, let's jump into it. Let's start with oil because that's really where the whole story begins. Right now, tensions around Iran and the Strait of Hormuz have pushed oil prices significantly higher. And this is important because 20% of global oil supply flows through that route. So, anytime there is conflict there, oil prices tend to spike. Oil has recently moved from around $60 per barrel to over $100, which is a huge move. And when oil rises this much, this usually tends to higher inflation. This is because production and transportation costs increase. Businesses then pass the extra cost to consumers. So inflation starts rising again. And if inflation is rising, the Federal Reserve cannot cut interest rate as easily as the market expected. For most of the last year, the narrative was that the Fed will cut rates and continue easing monetary policy this year. But now the story is starting to change. And that shift is what is driving a lot of the moves you're seeing across the markets. Now, because of this, indices have started showing weaknesses. We are seeing pressure on the Dow, the Nasdaq, even the S&P 500, and there are a few reasons behind it. Higher oil prices, increased costs for businesses, bond yields are rising, the dollar is getting stronger, and the markets are starting to price fewer rate cuts. All of this creates pressure on stocks. Actually, last week the Staredge Dashboard was giving us a bearish signal on the Dow, which is where I took the short position. At the moment, we are waiting to see if the Dow will manage to break this level. The trade is going well so far, so now I'm just looking to move my stop loss further into profit and lock in some gains. Now, let's talk about the US dollar. The dollar index has finally broken above the 100 level. This is a pretty important psychological level. What makes this move interesting is that it's breaking out of a roughly 6 month consolidation period from July 2025. And the reason behind the dollar strength are pretty straightforward. Markets are pricing fewer rate cuts. There's a safe haven demand because of geopolitical tension, and the US bond yields are rising. So naturally, capital flows into the dollar. Personally, I'm playing the dollar strength through GBP USD shorts. I recently closed upon dollar short for good profit. Now I'm waiting to see if we'll get a pullback for another entry. This was also another signal coming from the star edge. Right now, the score is around -3, which is a neutral score. But when we look at the macro difference between the UK and the US, the difference is quite large. The UK is sitting around 16%, while the US is around 66%. On top of that, the Bank of England is expected to cut rates, while the Fed may hold or even hike if inflation continues rising. So fundamentally, the dollar looks stronger here. Now, let's quickly talk about Bitcoin. Interestingly, while stocks were falling, Bitcoin has actually managed to hold on relatively steady. Some people say this is because Bitcoin had already experienced its correction earlier. But personally, I think if it wasn't for the oil situation and the macro uncertainty, Bitcoin could actually be pushing higher right now. So, it's definitely something I'm keeping my eye on. Now, let's move to the bond market, which many traders unfortunately overlook. But in reality, this is where the big players are. Right now, the TLT is falling, which means the bond prices are dropping. When bond prices fall, yields rise. And raising yields basically means investors are demanding higher returns to hold on to bonds. So, what the bond market is telling us is pretty clear. Markets are starting to price higher interest rates for longer. In other words, inflation may not be completely under control yet. And if the Fed cut rates too early, inflation could spike again. Finally, let's talk about gold. A lot of traders are confused about gold right now. Normally, when there's geopolitical tension like the Iran situation, gold tends to rally because it's considered a safe haven asset. But there's another side of gold that many traders forget. Gold is also very sensitive to interest rates and bond yields. Last year, gold rallied strongly because central banks were expected to cut interest rates. But now, if the Fed holds rates higher for longer, or even hikes rates, that actually creates a downward pressure on gold. Right now, gold is sitting around a major support level, and if the support breaks, we could potentially see a larger sell off, especially if we continue seeing dollar strength and rising yields. And of course, if Star Edge confirms the move, that could present a short opportunity. So that's what I'm watching going into the coming week. If you want to track this kind of data yourself, you can check out the Staredge Dashboard, which combines economic data, sentiment, and trend analysis. The link is in the description. If you enjoyed that video, don't forget to like, subscribe, and share it. And I'll see you in the next one.